Hey everyone, this is Dan Elliott here at our Peak Kitchener office. I've been doing some thinking and I realized we don't have time and we don't really want to do a lot of reading this day and age. So I thought let's try a video update as to kind of inform you guys as to what's going on in 2018 regarding real estate and mortgages. So let's head back to my office and let's get started. Okay, so let's buy a house. Hold on. That's how everybody starts. They always start with, let's buy a house. I want to buy a house, Dan. But there's one integral part we cannot forget. We need to talk about mortgages. We need to get into what's been happening in 2018 and really back to 2017. What's going on out there? So in 2017, we started to see the increase in mortgages. We actually went up significantly. The Bank of Canada increased it by 0.75%. So 3 times, quarter point each time. 2018, we've seen half a point thus far, and there was talk about possibly one more quarter increase in the end of 2018. Why does this matter? Well, it's going to impact what you do or do not qualify for. I've gone ahead and pulled a sample here of one of our current listings over on 27 Lantern Street. It's a great listing, beautiful home in Deer Ridge community, but unfortunately not everybody can qualify for this beautiful home. Now, it would have been much easier back in 2017 to qualify for this home before the Bank of Canada increased the rates, but unfortunately it has impacted things. So let's say you had a little bit more money you want to put down. You don't want to pay for that CMHC financing insurance there, so we're going to put down 35%. With the nice low rates we had in the early 2017, you could purchase this home with 35% down with a household income around $105,000, $106,000. Unfortunately, once again, because of the rates going up, our qualifier is more like $117,000. So we're seeing about a 10 to 12% increase in affordability. So that means that I have to make 10 to 12% more money, and obviously inflation has not gone up 10 to 12% since about a year and a half ago. So this is because of these rate increases. So that's one impact. The other impact we're experiencing is this stress test. It took place starting in 2017. If you had 5% down, you wanted to buy this home, you could purchase it for if your household income was around $139,000. But unfortunately, because of the stress test where we have to add 2% to whatever rate you're getting, you're looking at a much higher household income. Instead of being $139,000, because of the stress test, we're going to have to make around $166,000. Likewise, if we did 35% down, before you could have bought this home for $105,000 household income. Now we're looking at $117,000. That being said, let's move on and see what our options are. So let's get into the real estate side of things. What's been happening here? As of the October report from the Kitchener-Waterloo Real Estate Association, real estate numbers are actually down about 12.9%. And by down, I'm referring to the volume. So volume, we are down 12.9% as far as the number of homes that have sold year to date as opposed to the previous year. Funny enough though, we are actually seeing an increase in prices, which tells us the inventory is still quite low. But across the board, from this October to last October, so October 2017 to October 2018, we were actually up on average, taking all the homes from the $1 million homes down to the condos that might go for $250,000. We're seeing an average of 7.7%. However, if we look at that data a little bit more closely, we'll notice, and I believe this is part of the impact of the mortgage side of things and how this has impacted the real estate. So what we're finding is that the single detached homes are actually only up about 6.2%, whereas like I mentioned, the real estate market is up 7.7%. Now, what's really interesting is if you look at the condos themselves are actually up 24.1% on average since 2017. Now, why is that? Now, on the one hand, it may be that we have a lot more newer condo developments, that's for sure, but I would also argue that the mortgage market is impacting this. Okay, people are just not qualifying for these big detached homes like we have here at 27 Lantern Street. So this day and age, I've got more and more clientele, which I'm bringing to either the older homes, the townhouses, the semis, or possibly the condos. So if you own a home, this is great news. It means that your home is appreciating in value, which is always nice. But unfortunately, I don't just help people sell homes. I also help people buy homes. And if you're on the buying side, it just means that unfortunately, you have got perhaps a few less options, or you're going to have to spend a little bit more money on that house that you want to buy. With the significant increase in percentage sale prices, it tells us that the market is still quite strong. However, that being said, the volumes are down, which tells us that people just are having a hard time coming to terms with the new reality of the higher mortgage rates, higher purchase prices, and unfortunately, in many cases, you're just not qualifying for the home that they would like to buy. So we're seeing a very, very strong rental market out there. So for the landlords, this is a great opportunity for them. They're having no problems at all. But we're seeing, again, significant increases to prices too, which is there's a lot of competition out there for the homes, especially within the lower price ranges. If you would like to discuss these numbers a little bit more in-depthly, every home needs to be evaluated on an individual basis, and every neighborhood needs to be reviewed and considered as well as to what's happening in that neighborhood. We cannot just take the averages of the entire Tri-City area and apply that to every home. We need to look at what's happening in your neighborhood. Thanks again, everybody, for your ongoing business and for referring me to your friends, family, and coworkers. Without you, our business would not be able to be here. So it has been a pleasure helping you and your friends. And if I haven't had the privilege of helping you, by all means, I would love to help you in the near future, perhaps in 2019 or down the road. I've worked with some awesome people this last year, and I would love to share with you their stories. So check out my website or check below my newsletter and see what they've been saying in regards to both their mortgage experience and their real estate experience in regards to purchasing or selling homes. I look forward to assisting you in the future, so give me a call, text me, email me, whatever works best for you.